Hi and welcome to the channel. Google has been on a tear this year, up 100% from its April lows, outperforming most of the AI complex and catching some investors off guard. For nearly a year, Alphabet sat in the shadow of Nvidia's hardware dominance, Microsoft's enterprise positioning, and OpenAI's product velocity. The consensus narrative was simple. Google was late and missed the moment. The search business was dying along with the software business. They were destined to be the one that all of the new AI players were going to take from. But here is the reality. Google knows better. They have AI of their own in Gemini, and they also have something that the others don't: existing market share. We are talking about daily users starting their day on Google's platforms, Gmail, Google Docs, YouTube. The list goes on. Over the past 20 years, they have not only become the premier search interface, but have embedded their products into every corner of the tech world. Before we get into how Google reversed this narrative, I want to mention that the specific numbers and projections I'm referencing today come from my deep dive model. If you want to see the full breakdown, including the long-term financial modeling and valuation ranges, you can find my full Alphabet valuation analysis on my Substack, linked in the description. As always, please like and subscribe. It really makes a difference. This year, the market started to notice Google's transformation. The Gemini 3 inflection from response mode to strategic control. For more than a decade, Google's AI work was hidden beneath the surface of its products. The irony is that a company that built the transformer architecture foundational to modern AI spent nearly 2 years watching others define the public conversation. The release of Gemini 3 marked the moment that dynamic reversed. This was the first time Google delivered not just a model, but a coherent AI strategy, one where the model is not a feature layered onto products, but the foundation powering them. Gemini 3 is faster, more multimodal, and more efficient than earlier versions. But the technical metrics are not the story. The story is integration. Gemini is now operating through Search, YouTube, Android, Chrome, Workspace, Ads, Cloud, and developer tooling. Google doesn't just have a model, it has distribution. Billions of users will interact with Gemini not by adopting a new product, but by continuing to use the products they already rely on daily. In AI, adoption friction is the silent killer. Google doesn't have that problem. This shift from fragmented experimentation to unified deployment is the moment the market finally stopped viewing Google as a laggard and began valuing it as an AI platform with global reach. The search cannibalization myth. One of the most persistent bearish arguments over the past 2 years has been that AI would cannibalize Google's core business. If conversational interfaces can provide answers directly, why would anyone click on links, view ads, or navigate traditional search? The assumption sounds logical. It also misunderstands how search works. Search has never been about information retrieval alone. It has been about intention clarification. The transition from keyword search to generative reasoning has not displaced user behavior. It has intensified it. Early usage patterns across AI-powered search demonstrate higher session depth, more follow-up queries, and clearer commercial intent. Users aren't searching less, they're searching better. And importantly, advertisers do not pay for the existence of queries. They pay for measurable outcomes. AI-enhanced intent surfaces allow Google to match users to solutions, not just suggestions, with materially higher relevance. If the economic backbone of search is conversion efficiency, then AI does not destroy the model, it supercharges it. The evolution of advertising in the AI era. The core misunderstanding around Google is that advertising strength implies strategic fragility, that a mature revenue base leaves no room for transformational business models. In reality, the opposite is playing out. Advertising is adapting, not declining. Under the AI paradigm, ads shift from broad targeting to precision relevance. The unit of monetization moves from impressions to inferred need. Instead of users discovering products through lists of links, products emerge through contextual understanding. A future Google query may not look like, "Give me the best running shoes for flat feet." It may become, "My knees are hurting after long runs, and my current running shoes aren't working." instead of a list of running shoes the user has to scroll through. The AI-powered version pinpoints the issue and makes a direct suggestion. The more personal the interaction, the clearer the buying intent, and the higher the economic yield per user. Google's scale in first-party behavioral data, real-world context, device presence, and consumer history creates a personalization engine that is difficult, if not impossible, to replicate. There is no sign that the advertising model is breaking. The evidence suggests it is bending into a more powerful form. Why the market is repricing Alphabet. The stock's doubling is not speculative mania. It is multiple expansion driven by a new understanding of the company's forward trajectory. Investors have finally stopped valuing Alphabet as a maturing advertising utility and begun treating it as a multi-rail AI platform with recurring subscription economics, hyperscaler cloud exposure, accelerating product integration, and a user base unmatched in digital history. Revenue growth has re-accelerated, margins are stabilizing, cloud is scaling into an enterprise AI workload beneficiary, and Gemini is not simply competing, it is embedding. The market isn't betting on a turnaround, it's recognizing that the company never lost the strategic position it was accused of surrendering. Where this goes next. Alphabet's rally reflects more than sentiment. It reflects a structural shift in how the market now understands the company's trajectory. The question isn't whether Google will participate in the AI economy. It's what the business looks like once AI is fully embedded and monetized across search, cloud, ads, devices, Android, and Workspace. And the numbers being modeled for that future are materially different from the business investors thought they owned 2 years ago. In the valuation work I've been building, Alphabet's revenue grows from roughly $408 billion today to more than $1.4 trillion by 2036, driven not by speculative assumptions, but by the tangible shift already underway. AI-powered subscriptions, Gemini-enhanced productivity tools, AI inference workloads in cloud, and a fundamental evolution in how advertising extracts value from user intent. Under that scenario, Alphabet is no longer valued as a mature ad business. It behaves like a diversified AI platform. Free cash flow expands, margins stabilize, and the economics of scale begin favoring software, not infrastructure. By the terminal year of the model, EBITDA approaches the $1 trillion mark and free cash flow exceeds $390 billion annually, even under conservative assumptions. Depending on how the market ultimately values an AI-first Alphabet, whether through a framework similar to today's mega-cap tech multiples or something closer to a recurring revenue platform, the implied long-term value spans a wide range. But even the base case scenario suggests that the current move may represent repricing, not euphoria. If Alphabet fulfills even the middle of this trajectory, the company's long-term value will sit meaningfully higher than where the market is pricing it today, and possibly much sooner than many expect. Thanks for reading. I'd love to hear what you think. If you want more insight into where Alphabet could go from here, including long-term financial modeling, margin assumptions, segment-level drivers, and valuation ranges, the full breakdown is available to subscribers. You can find the link to the full Alphabet valuation analysis on my Substack in the description.